What is up? It is December 11th, and I basically have not been trading stocks or investing very much lately, but I've dabbled um, quite a bit over the last 10 plus years, and I'm looking to get back into it, day to day right now as the markets are picking back up, and some of my scars have healed from losses a couple of years ago. um, and first I'm going to talk about my strategy going forward. In the past, I've day traded. There's a few strategies that you can do: day trading, swing trading, and long-term investing. So going forward, I'm going to lean towards swing trading. Basically, day trading is stressful. Uh, it's kind of more risky. You can limit your risk, but it's still, in general, more risky. Takes more time out of your day. Every day, you have to really stay on top of it. And long-term investing, you are not going to make huge returns in general. So swing trading is kind of a happy medium. Um, this guy, Kulamagi, I think he's from Sweden or something, but I've learned a lot from watching him on YouTube and Twitch and whatever else. He has this website and he talks about his strategies. I don't think it's verified, but this guy has made tons of money. Um, he's up to nearly like $100 million in his account. This is according to him, but he's quite believable if you check out his history on Twitter and everything else. I do believe him. He started with thousands of dollars day trading, but now he's totally swing trading, and he made that transition kind of early on. Anyway, swing trading, uh, you know, it takes a lot less time day to day. I still have a job that I am focused on, my career. Um, and anyway, you can check out his website here to learn about his setups and everything. I'll take a look here at his 3 timeless setups that have made him tens of millions. This was written a few years ago anyway. There's no date. Oh yeah, 2021. So, his 3 setups are breakouts, episodic pivots, and the parabolic short. I am not going to look too much at the parabolic short right now. It's just when a stock has gone up in a parabolic move, and you short it. But it's kind of risky. It's more of a day trade. But in the future, I am going to look to do some parabolic shorts and shorting in general. But for now, I'm focused on finding episodic pivots to swing trade. And I think breakouts and episodic pivots are highly intertwined. So we can take a look at things he says here. Like, I don't believe you should ever have more than 30% of your account in any one stock or ETF. I'm going to take a look at my portfolio and you'll see that I do have over 30% in Tesla, which I plan on bringing down because that's more of an investment and I'm looking to swing trade. But I'll still keep about 10%, maybe 20% in Tesla as more of a long-term play. one thing about long-term investing is you have lower taxes on gains if you hold it for over a year. So that's something to keep in mind. If you believe in a stock, if it looks good technically, then holding it, the longer you hold it, the more it can move and the less taxes you potentially pay on gains. So he starts talking about breakouts. And he's talking about how these patterns have played out over at least the last 100 years, and even before that in different markets. So he says to find breakouts, you scan for the top 1 to 2% of stocks over the last month, 3 months, 6 months, and I'll show you how I do this using a free website, and there's a paid version. So there are 3 steps to the setup. So first a big move, and then a pullback or a consolidation, and then a breakout. So he has an example. I'm just going to skip right to it. This is a chart of Tesla from quite a while back, but it serves as a good example. So you have this big move. You have some consolidation here. Some people call it a flag. And like this could be, so this is a breakout. First we'll talk about breakouts, and then this would be a breakout. So ideally you would see this in the morning, and you can see it opened right here. If you can get in at the open, that would be ideal, and you've already made this move. So yeah, the nice thing about this is you take a look in the morning, you see what's moving, you see if there are any good setups. You can take your position, you can set your stop loss, and you can just move on with your day. You don't have to watch it throughout the whole day. So yeah, now he goes from this chart. This is the same chart, but he shows you what happened after that breakout. So this is the breakout that he showed you up here. And if you buy right there between 172 and 179, and then you see it moved up all the way to 350 in the span of like a month and a half. He goes into other things like this is probably the 10-day moving average. This is probably the 20-day moving average. He likes to sell if the stock closes below the 20-day moving average. You can see in this case it never did. You can see it poked through the bottom here, but it didn't close below this line. So you can set up these lines on, I'm not sure if you can do it on the free version that I'm going to show you, but you can set it up possibly in your brokerage, or like stockcharts.com, I think. So that is what he uses as a indicator on when to sell. But the pattern you're looking for here is the breakout. It broke out, it moved a little sideways, it moved up, sideways, moved up. That's kind of how these stocks move. They move up, they move sideways, they move up, sideways. Let's see, episodic pivots. So, okay, episodic pivot. This is what I'm going to focus on. There are many types of EPs. So, what is episodic pivot? Episodic, containing or consisting of a series of loosely connected parts or events. Okay, so occurring occasionally or at irregular intervals. Pivot. The central point, pin, or shaft on which a mechanism turns or oscillates. Anyway, he didn't come up with this term, episodic pivot. This other guy came up with it. You can Google it and find him. But it basically means, the stock moves big either on earnings or guidance. Could be government regulation or like a spending package. It could be a biotech stock that has an FDA decision or study results. It could be a lot of things. Like it could be directly the earnings, or it could be some type of story. So like his example here is NVIDIA. Stock gapped up on big earnings. I mean, NVIDIA's been a huge stock in the last few years. Their earnings have gone crazy because of AI and self-driving and crypto and video games and data storage, all that. But you can see the stock has one big day, and then you try to buy it that day, and then you hold on while it goes up. We'll talk about when you buy, where do you set your stop loss, where do you set your target, when do you sell, and that's kind of where the art form comes in, really. So this is an episodic pivot. You try to buy this day, you hold it. It went from 80 to 120. That's a 50% move. Here's another episodic pivot. It could be an episodic pivot on the downtrend as well. So this day they reported earnings and it was down. You might want to sell there because it kept going down. But here's another episodic pivot he's pointing out, an earnings. And then the next chart is probably going to show what happened after that. So this is at 115-ish. So this is where that chart left off. So if you had bought this, I think this is a daily chart, it went from 115 up to 160, pulled back to this, which is probably the 50-day moving average. Yep, you can see these moving averages. He would have sold once it opened or closed below the 20-day, and then that would have been a pretty good sell. It's hard to time it selling up here. You can sell pieces. That's probably what I would do. You're never going to time your exit perfectly on every stock, obviously. But, so yeah, episodic pivot here, you buy, it ended up going all the way up to 220, so, it almost doubled within 1, 2, 3, 4, 5, 6 months. So yeah, that's the general gist of it. You look for stocks that are up. You might so every day you'll look for episodic pivots. You'll look for stocks that are up about 10% or more. You'll read the news. You'll decide, is this news really good, in your opinion? If it is, if it's a good setup. Another thing that makes it a good setup is, let's see, like if a stock has moved sideways for a long time, and then it jumps up, it will have more, potentially more room to run to the upside. But the other thing is, stocks can keep going up more than you expect. So, there's an art to this for sure. So I'm going to look at my portfolio here. I haven't been that active, investing and trading. So it kind of looks not ideal, I would say. So Tesla is 40% of my portfolio. I bought it around 200. So that was just kind of lucky timing. I had just finished Elon Musk's biography, and I was kind of excited about self-driving and robots and all of that shit. So anyway, it worked out so far. I also have Tesla options that expire in 2025, I believe. So those are leaps. They're long expiry something something. People call them leaps. The options that expire in like a year. The nice thing about those is if you keep them for the whole year, you can get your long-term gains. Yes. Next one is SJM, which is Smuckers, JM Smuckers, the like jams and jellies company. So this is the website I use to do my research for the most part, finviz.com. I just got the paid version, which, you know, I had the paid version before when I was pretty actively trading, and then I lost a bunch of money, and then I canceled it. You don't need the paid version really. Like this page will still look the same if you don't have the paid version. Paid version, I think you have more of a real-time quotes. You can draw on the chart. You can manipulate the chart a little bit more. You can see the intraday chart. But let me explain the SJM chart a little bit here. So this day they announced they were buying Twinkies. And I think I shorted them this day, and I should have held the short because it proved to be, not a good move, according to Wall Street, basically. And intuitively, buying Twinkies seems like a pretty dumb idea, as health food seems to be pretty important and whatnot. But anyway, on December 5th, you can see the date here, they announced earnings, pretty good earnings that gapped up. I thought, this has been down quite a bit from their peak at 160, 162, but it was at 160 as recently as May. And then it was kind of trending down. Then the Twinkie debacle happened, and it got all the way down to 100-ish, 105, 110. But anyway, they announced their earnings. In the end, it's really all about earnings and future earnings when it comes to stocks. So the earnings were good. I bought in that day around 116, 115, and it's only been 4 days. It's up to 120. If we look at the hourly chart, anyway, it's a pretty low volatility stock, and it had a nice earnings. I figured I would jump in, and I put a stop loss. So that's the next thing is stop losses. Let's see if I can go back to the earnings date, which was December 5th before the market opened. So I'm going back to December 5th. So they closed the previous day at 112. They opened up at 115.84. They had a dip. That happens a lot. I probably got in on the dip. But basically, if you're buying here, you're going to want to set your stop loss, maybe at the bottom of this candle. Another way to do it would be you can see that, let's see, their average daily range or average true range is 255. So that's a good stop loss distance to have. So if you wanted to risk, $100 and you wanted to use this as your stop loss, you would take 100 divided by 2.55, and you would buy 39 shares, which would have been about $4,500. It all depends on your account size, how much you want to risk. But, if I had bought here, let's say, which was about 116 and risked 255, my stop loss would have been about 113. Now this fucking chart is cut off because it's being a fucking cunt. But it never got that low. Yeah. So that would have been a good stop loss. You wouldn't have got stopped out. I've moved the stop loss up at this point. I think I moved it to like 116.50 or something. If we look at, that's the art part. So I'm still, figuring out where to put the stop loss. You could move it up to break even. So if you bought here at 115, and your original stop loss was 113, once it starts moving higher, you could bring your stop loss up to break even. So you're kind of guaranteed not to lose money. And then as it moves higher, you can keep bringing the stop loss a little bit higher. It all depends on, how badly you don't want to get stopped out, yada, yada. What else do I have in the portfolio? I have this ETF that I'm just going to sell. It's like a high dividend stock ETF. It's pretty good for just saving, keeping the money growing with like a 3% dividend. I think its main holding is like Microsoft. So it's a very stable ETF. I'm going to sell it because I'm going to trade more. I have Snapchat options. So let's take a look at Snapchat. No idea why I bought these, honestly, but it worked out pretty well. I'm up like, I don't know. Let's say I bought them for 300 and now they're worth like 1,800 or something like that. So yeah, I would think about, probably selling a few, because currently I don't want my options to really be more than 10% of my portfolio. And right now, if you add these up, you're at about 12%, 12.5%. But, they're up a lot. So another thing is to keep your winners and cut your losers. So, you can trim your winners here and there, but it's good to let them run at the same time. In terms of the chart, it has a few nice jumps. It's staying up. It's moving beautifully above the 10-day moving average. If we look at the weekly chart, so if we zoom out all the way to the monthly chart, we can see back in late 2021, it got up to $83. Since then, it doesn't look so hot. But everything kind of peaked out back in late 2021, and the market kind of looked like shit for 2 years pretty much, until this year. Basically the start of this year, things started to trend back up, like the big stocks like the FANG or the Amazing Seven or whatever, like Microsoft, Amazon, Meta, all of those motherfuckers. So yeah, I mean, my point would be that Snap could go a lot further if we look at their fundamentals. Um, like for Smokers, I didn't even look at the fundamentals because I know the fundamentals are, solid. They're not like a high growth company. They're not like a piece of shit company. They are a solid company. We all buy their shit. Snap, on the other hand, it's a solid company. It's a growth company. You can see the sales of the past 5 years has grown at 40% annually, which is a lot. Their sales are $4.5 billion, according to this. Their market cap is $26 billion. So I mean, their price to sales is 5.7. That's in a normal market environment, pretty high, but for a high growth stock, it's not that high really. Their gross margin is 53%, which for a tech company isn't great, but it's not bad. They're losing money because they're focused on growth. They're paying influencers and their employees, and trying to make the platform as user friendly as possible, and trying to incentivize creators to bring more content. I think that's why they're losing money anyway. Who the fuck knows? They have $2 in cash per share. They have 1.3 billion shares, so they have 2.6 billion in cash. Something like that. Probably they have more. Anyway, doesn't matter. They have a good amount of cash. Their debt to equity is kind of high, but they have plenty of cash. But they are burning the cash, so they're losing, 70 cents per share. Next year, they lost 85 cents per share this year. That's not great since they only have like $2 per share. Eventually they would run out of money if they did not start making money at some point. But I think they could make money if they stopped spending like drunken sailors. That's just a guess. But, people still use Snapchat, but not as much as they used to. Anyway, all of this is to say, where could they get to? At one point, they were an $83 stock, which meant that they were at like 100 billion market cap. They're currently at 26 billion market cap. Who knows? You can't really go on intuition or anything. Just looking at the chart, it just moved a good bit higher today. It's up 5%. So what's the news? Let's see if there's news today. Pinterest Snap upgrades Signal brighter advertising outlook. Pinterest Snap upgrades Signal. I don't know what the fuck that means. Why Snap is up today. Snap stock is rallying, but Wall Street has worries. A new bull has answers. Barron's, you have to pay for their articles. I could get by the paywall, but I'm not going to bother. Snap surges on upgrade. Okay, so they got upgraded. You can see today they were upgraded by Wells Fargo from an $8 price target to a $22 price target. They're currently at $15.88. I don't put a lot of stock in price targets. I put almost no stock in price targets. So I might trim today because, just because their price target went up, and I think analysts are not to be trusted for the most part. And I'm trying to just trade on technicals. I'm going to trim a little bit. What time is it? It's 2:38. So I have time. I will trim a little bit. I'm at 30 minutes. I'm going to keep going. Fuck it. Meta. Meta is my last holding. I've been holding this for quite a while. It's a very small part of my portfolio. I'm going to keep it because Facebook prints money. So does Instagram. If you know anything about e-com, or digital marketing, people are spending tons of money on Facebook and Instagram marketing. If you look at their PE ratio, it's not something you want to care too much about with trading, but it's still, every piece of information is valuable. Their price to earnings is 28.7. That's pretty normal for like a strong growing company. It's pretty low for a strong growing company, I would say. Their forward PE is 18.5, so they estimate next year that they'll make $17.50 per share. Hopefully everyone knows what that means. I think it's pretty simple. Their sales are 127 billion. Their sales, this is something you don't get on the free version. I really like seeing these charts. So this shows you the sales of the last 5 years. On the free version, you do still get to see the sales past 5 years average growth. But you can see here, from 2021 to 2022, there was no growth, but you would still see a pretty good average growth on the 5-year. You could then look at the quarter over quarter, and it would probably not be as good. Obviously, there'd be no growth. But I like seeing this chart. That's one reason I upgraded back to the paid version of this, FinViz. But so yeah, next year, so this year, they are pulling in 127 billion. Last year, they pulled in 116 billion. So that's pretty good sales growth, like 10% or something, less than 10%, but that's still pretty good. Their gross margins are awesome, 80% gross margins, because they're printing money. They don't need to do anything. They have the users. They just sell the advertising, and their profit margin is 23.4%, similar to something like Apple. Like, they could even make more money, but they spend money on stupid stuff as well, like the metaverse and stuff like that, even though, they've cut back from their crazy spending in like 2021 when the metaverse was hot. So yeah, they print money, and they will keep printing money for now. So I will hold on to that. It's a small part of my portfolio anyway. The chart looks good, it's just like holding solid. If it broke below, 300, even if it was down here, if it broke below these levels here, I would think about selling. Probably not. All depends on the overall market. That's something else we should look at, the overall market. So I'll just check the SPY, because stocks move, a lot of it depends on the overall market. So overall market the last month or two has been very good. Obviously, you can see here from like end of October to now, it's up from 410 to 460. That's like, 10%, over 10%. This is a nice breakout from this trend. So this is a breakout. So this has been a good day to buy. It's moved up since then. If it breaks below the 10-day, you start to worry a little bit. Breaks below the 20-day, you start to worry a little bit more. I would say if it broke below, this level where it's kind of consolidating, you start to maybe close more positions, be more cautious, get rid of any margin if you're holding anything on margin. Yeah, I got 3% cash. My plan is to look for episodic pivots in the next few days and just every day going forward. These mostly happen on like Tuesday, Wednesday, Thursday because there's really no earnings on Monday. Today's a Monday. So I was gonna, you know what? Fuck it. I will just keep going. So to start looking for stocks that are interesting, you can come to the screener here. So if you click on screener, it's a stock screener. And then you can look at different attributes. We're going to look at performance, and then you can sort to see which stocks have done the best. I'm going to do year to date. You could do this half. That might be more. Let's do that. I clicked on it too many times. So I think this is the performance since, July 1st. So this half of the year. So let's look at this first company and see what we think. Shot. I think I've heard of this. They make a beverage that you can drink after you've been drinking alcohol, and it sobers you up. So if you click on their name here, you can go to their website. That's a good thing to look at. Pretty simple. First patented beverage that helps you recover faster by reducing blood alcohol content. So pretty interesting. Kind of like a, crazy thing that you would never think about. Useful if you go to the bar and then you're drunk and then you want to drive home. You take this beverage and you're good to go. I think that's the whole idea of it. How prevalent of a use factor or, prevalent would this be? In my opinion, not that prevalent unless it prevents hangovers. Then it would be very interesting, but I think they would talk about that more so up front. So the stock was trading at 28 cents in June. It moved up nice and slow here up to $1.50. It was going sideways between $1 and $1.50 for a few months, and then it broke out. So this point would have been a nice point to get in. But here we are now. So right now, it's below the 10-day moving average. It's going along the 20-day moving average. Here's another thing. Even if this stock and this company long-term is a piece of shit, it could still go higher. Another thing to look at is the volume. So you can see the volume here on the biggest day. They traded 77 million shares. The price on that day, was between $4.30 and $7.50. So let's say an average of $6. So 77 million times $6 is 450 million. So $450 million changed hands here. That's not a lot. If you look at relative volume, or average volume is 5 million shares a day. So 5 million times $4 is only 20 million. So if you have a smaller account, like I don't have a big account, I can trade this stock, but it's not going to be super liquid. So if you look at the intraday, it's going to look really choppy, I would say. So yeah, it's kind of choppy. But if we had a breakout of some sort, you'd see a lot of volume come in. So basically, this is one to watch. And what I would be watching for, so one thing to watch for would be to break out above that line. That's a pretty rough line, but a secondary line might be even here. So if you had a breakout over this few days, you might get a move. But patience, you got to have patience too. So if you see it riding the 20-day for a few more days and then you get a pop, it would be an interesting buy at that point if it broke above this line. If it, did a few more days in here, and then one day you got the start of a breakout, would it keep going? Possibly not, because you have a lot of overhead supply from this day. So there are people stuck in the stock from this day, and the low of that day was about 436. So if you did break above there and you held it, it would be looking good. So I'm going to save this chart, and if it got into the blue sky over here that I would call, it would be a good buy, and you could put a stop, down here somewhere. This is what my brain has soaked in over years of watching stocks, and it probably makes some sense, and it probably is confusing to most people, but whatever. How do I save this fucking chart? Doodly-doo. So first I'll save it. I made this watch list, EP hunting, December 2023. Yeah. No. How do I save this chart? Can I save this chart? I think the chart gets saved automatically. So if I exit out and open a new window, oy vey. If I just go back to shot, yeah, pretty sure my lines are still there. Yeah, so the lines are still there. I can switch between. So if you have the free FinViz, you're not going to have intraday, the 1 minute chart to the 1 hour chart. Yeah, I mean, another thing you could do here is dip buy. You could even buy it now, and set a stop loss below this bottom channel, bottom thingy. So I'll just do that. I really don't care. So I'll use my cash to buy here, and my stop loss is going to be at 336. So that's 55 cents. Let's see. I trade from my phone. I'll check how much cash I have. I'll divide that buy 391, and the risk would be 55 cents. I can multiply that by 0.55, and if that risk is okay to me, then I'll go ahead and do it, and it is okay to me. So let's buy some stocks. This is not very patient of me, but you know, YOLO. First stock I researched, I'm buying. So yeah, very disciplined, very disciplined. I'm going to set my stop loss right now. And make sure it's set correctly. And we're in, and we have our stop loss in. We'll see how that goes. All right. Next up, MYO. This one we'll get to. I don't like how it looks too much right now anyway. Let's exit out of that. Yeah, I mean, I don't have a lot of confidence in this company, but I do think, you know, the stock could keep going. One more thing to look at. I mean, there's a lot you could look at here. But we're trading off the chart. We're not really caring too much about the financials and the fundamentals. You know, this company, you know, it's a small, newer company, but it doesn't look horrendously bad. There's not like a ton of debt. How much cash do they have? This stupid thing is in the way. 16 cents. Like, they're going to have to raise money. Did they already raise money? Okay. So to find that, I did a Control F offering. What is Jupiter Wellness? Do they operate as Jupiter Wellness? Well, August 16th, there was an offering, it looks like. That was... So that's good that they already did an offering, which means they raised cash back in August. Let's read that story. No, they're not. Did they change the name of their company? I'm guessing this is the same company. Maybe they changed the name of their company. So it was Jupiter Wellness. Yeah, they changed the name. So, okay. Same company. Please see blah blah blah. Jupiter Wellness will retain approximately 4.5 million shares. So they can sell, they're expected to make $6 million. Let's assume they did that. So they have $6 million. That's still not enough to fund their operations. But when they announce the offering, that's usually the big risk with these companies. They announce an offering and the stock tanks. So last time they did an offering, the stock did not tank. So, and the risk there is if they announce the offering after hours or before hours, and the stock opens way lower, it's going to go past our stop loss, and we're going to lose more than we planned. I didn't put that much money into the company, really. So I'm not super worried about that. And last time they did the offering, like I said, the stock didn't tank. And, you know, it's a good story. This company could be legit. It, you know, could have a market. It could become popular. Could be legit. You know, it's a tiny company. The smaller the company, the more it can move. It's gone from, you know, 25 cents up to $7. It's sitting right in the middle of that. Not a bad place to buy from what I see. So there's that. Okay. The next stock up is MYO. I do not like the look of it, really. You know, it's moved up a lot. It's consolidating. You know, if it broke higher than 450, it could be a good buy. You know, let's look into the company. Medical device. Medical robots. Produces myoelectric orthotics for people, blah, blah, blah. You know, they're designed to support the arm and restore function to the weakened or paralyzed arms of certain patients. That's pretty cool, and that's pretty awesome. If it works, that's great. Cash per share, 40 cents. They're losing 50 cents this year. That's tough. Their sales are growing, which is good. Let's look at their website. Okay, so it's an exoskeleton type thing. Could be good. This guy has a U.S. Air Force. Maybe they're partnered with the military, which would be cool. A lot of people, I guess, have issues here. You know, if you have a stroke, I don't know what this means for veterans with injuries. Looks pretty legit. Looks pretty legit. Their gross margins are good. They have 100 employees, so they're not some 10 employee bullshit farm. Health blog. I mean, clearly they're doing something right as the stock is moving very nicely. Let's zoom out, see what we can see. So they've been working on this kind of stuff for a while. Their stock was previously quite high. It's obviously faded down. They've been selling shares to raise money. There's not a lot of short float, so that could indicate that it's not a complete bullshit company. But that also means there won't be a short squeeze. This looks, you know, promising, I would say. It's riding up the 10-day. Let's see if they had an offering. They did a $4.4 million offering at the end of August. They announced it on the 24th. And the stock reacted well. So $4.4 million is about, what would that be, like 4 over 26 is like, my brain hurts right now from talking so much. I don't know, 14% or something, 14 cents a share. It's not a ton of money, but something. And it didn't go down on the offering, which is a good sign. That's the main thing. So this looks good. This was a nice breakout. I mean, this was a nice breakout too, obviously. It broke out here from like 140, and it really hasn't looked back at all. It broke out here. You know, once it broke out here, that's a buy. And it's looked good. I think this is one to watch for sure. But, you know, and it has a firm top. If it goes over 450, could look very good. These companies too get interest from short sellers, even if they're decent, good companies. Short sellers see a graph like this and they say, "Ah, this is a piece of shit company. It's going to go back down." If you get a bunch of shorts piling in, you get a short squeeze. So yeah, I'm going to watch this. What happens if I hit that? So I have 3 EPs. I'm 2 for 2 on this screen. Let's see if I can find one that I can say this is a piece of shit. Let's see. Biotech. 1.6 billion. Burning through money. With biotechs, I like to look for news on what phase study they're in. Phase 1, 2. Usually phase 1, 2 biotechs are just super volatile. Catalyst. Why is it called Catalyst? Why are they saying Catalyst? They combined with another company. That's always kind of weird. Looks like they went from being called Catalyst to Jeer. Something to do with liver disease. I always take interest because I like to drink. Let's go down and read the summary. Jeer Therapeutics operates as a biopharmaceutical company. It's focused on the development and commercialization of hydronidone F351 for the treatment of metabolic dysfunction associated with steatohepatitis, basically liver disease. This is a big thing nowadays. A lot of people have metabolic dysfunction. So we might be 3 for 3 on, you know, potentially good companies here. I was hoping I'd find one to, you know, dismiss. But, you know, if a company's up this much, it's worth keeping an eye on. You'd want to see some consolidation here. We'll check back with it. I'm going to cut this video off for now since it's been way too long. And I'll be back tomorrow to keep searching for setups.